The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We'll take a look at the German DAX first, followed closely by the FTSE. As you can see, they're both up there challenging some serious resistance areas, and the key word there is serious, and the second key word is resistance, because it can go through these numbers pretty easily, as you can see in Tesla and Amazon and everything. I couldn't believe when I heard on the news today, I think Tommy said it, that Bezos increased his wealth in the last 24 hours by $15 billion. A million here, a million there. Pretty soon you're talking serious money. Anyway, that was, we'll see what's happening. We got a lot of things happening, folks. One of the things that we've been waiting for a long time is this breakout in gold. We've always thought that we had a shot at this level of 1850. We'll get this up here. You'll be able to see. This is from the newsletter last week. You'll notice that the key level there to watch is 1792. Below that means there's a serious problem, but we've broken out to the upside. But you notice here in the middle of the page there, it says above 1800 suggests 1840, and we've hit 1842 today. So we'll look at gold here because it's got a possibility. I'm going to cover silver too, and I'm going to cover crude oil. There's just a lot of things happening, but I want to do them one at a time. Let's just do the gold first. Just look where we are here in the gold, folks. On a shorter term time frame going over the last 7 or 8 months, you'll see that 3 drive pattern that we had with a big dark line there on the left hand side there from December through April. Then we backed off to a 382 retracement, and that was the real key that gold could be really bullish. You know, that was a really bullish sign. You got an ABCD, just missed the 382, but the ABCD was perfect. I didn't get in till a little bit later, but at least we got into some of it, and we're still in it. And well, I'll just show you where I think we are today in the gold, because we've had some really nice moves here, and we're up against this really strong 840 level. But if we look at this on a 4-hour chart, I think there's a possibility we could be making the ABCD there at 1852 today, but we've been up for, let's see, this is the 5th day for gold, and silver's been up so many times the calculator quit working. But silver says something's going on with the silver market, folks. I think they've got somebody trapped because something is really making silver move, which was one of the key reasons why the gold was, beginning to look even, more and more attractive, because the way that silver was acting, I mean, my goodness, it was just really something. Just look at silver here, folks, here on the weekly chart. Just look at this. And our hats off to Mr. Z here, because he's been bullish this since Hector was up, and that dog's now 25 years old today. So we'll keep an eye on that. But look at that. We've taken out the highs of 2016 now, folks, and we did it with ease. Look at this. We're trading at 2140 today in the silver. That's one heck of a move. But look at silver just on a longer term time frame. If we take it down and we look at it on the long term weekly, you'll see it doesn't look nearly as bullish as it did before. We're basically just right at a 382 retracement. We've taken out the high of 2016, but look at that thrust after we made that ABCD down there at just under $12. That was on March the 23rd when the whole world was falling apart. And that was the time to be looking to be a buyer of silver right at that 1.27. Our good friend Cy Monley backed up the old 150 pickup and loaded some up there at that price, and he's looking pretty good today. Let's move on to We covered the long-term silver. Let's move on here to the gold, and we'll see another part of it that is interesting. I want to get this up here so we can see it right there. Hold on. Is that the part right here? Oh, no. You know what I've got to do now? I think this is it. Yeah, here's the daily silver. This is why it's so important. Let's get this up here because it's we're up against some really stiff resistance. Not only that, folks, that I believe in this astrology stuff. Don't understand it a whole lot, but I really believe in it. And but anyway, yesterday we had that new moon, and today we're one day past that new moon, and the most it has to move is 1 day. So if these things don't turn today, who knows where they're going to go? And they've been going up for a long time. I have no idea why these stocks are going where they are, folks. I really don't. First of all, I don't follow the stocks at all. I look at the patterns. I can see why they're going there. There's look at Tesla, what it did, folks. Can you believe? Look at Tesla. We looked at this yesterday. This stock had a high of 1795, and we went all the way down to 1465 and change, and now we're trading up at 1680 this morning. I understand. So this is these are not times for the faint of heart, but markets go where they're supposed to go. It's a market of stocks, and you can't fight it. I know part of it could be the Fed. We've heard great explanations from Shane Smolian, the Wolf Trader, about how the Fed has been in there, and you have to he's been spot on. So something's happening to these markets. I mean, the fundamentals, if you want to call them fundamentals, or the news of the day, I mean, they're pretty much shockingly bearish. But what does the market do? It keeps going higher and higher. It keeps climbing a wall of worry. Now, that doesn't mean that it's wrong. It just means that's what's happening right now. Yes, I read that yesterday on Bloomberg that the rookie card for LeBron James sold for $1.845 million at auction yesterday. I think that is probably a cheap price. How insane can you buy? Hey, look, if they'll buy a banana on a cardboard like Bill Meridian told us, I mean, they'll buy everything. Yeah, I mean, I understand, these prices that they're looking at, it's just really, really quite amazing. But that's neither here nor there. Hey, folks, my job here is to try to find low-risk entries, to try to find whether you might have a place to make some money or not. Now, the Nasdaq went up and didn't quite make a new high last night. We missed it by a hair's breadth, which was really surprising because it was the strongest. We were up way up there, and then it rolled back, and we're down about 70 handles from the high. And another one that's going to be real interesting today, folks, because we're 1 day from that new moon. We'll get this up here to take a quick look at it right here. You'll see that there you go. You'll see that this is the cash S&P. We should make a new high by just a little bit higher, around 3281. That would be just about where we hit last night on the futures. So we're going to be watching that. Yes, Duffy, I remember the real estate market in Tokyo in '89 when it was topping. I remember CNBC was there. They put a $1,000 bill on the sidewalk, U.S. $1,000 bill with the picture of Grover Cleveland on it, and they said this is how much real estate you can buy for $1,000, and it was within 30 seconds of the top of the Tokyo stock market. I also had a good student couple that traded out of Seattle, Washington, and they had a mom and pop real estate. Well, I'll get back to that. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We were talking about the Japanese real estate market back in 1989. It was December, I think it was around early January when this event happened. I had a really nice couple that I had taught to trade foreign exchange and gold up in Seattle, and they had a mom-and-pop real estate company, and they wanted to sell it and go into trading full-time because they were doing really well with their trading. They got a fax from a gentleman in Japan, a corporate fellow, and he said, how many listings do you have? And they had something like 72 listings. And he said, can you send me some information on those? And they did. And in the next few hours, he came back and he said, I'd like to make a full price offer on all 72. There was a couple of restaurants in there and a few other things, but the guy bought all 72 of the properties, and he paid a lot of money for those, but that got him out of the hole. And that, you know, he was buying Seattle property really, really cheap, and getting out of Tokyo is really, really expensive if that's what he did. But that was the story behind it. But they went on, and they were relatively elderly. Well, they were in their 60s back in there, and that was 30 years ago, and they passed away, I think, about 20 years ago. Anyway, long-term story, but they did get out at the right time. So there are people that get lucky doing that. I want to share with you something today, folks, because I do a lot of research. Some of it's full of baloney, some of it's pretty good, but on and all, it's not too bad. But what I want to do today is to show you what's been going on here with the Nasdaq. This is my AI program that I work on. You'll notice that we have a bottom due here at the open between 9:30 and 10 o'clock, and that could be a very, very significant significant bottom because we went up and we made a double top in that Nasdaq. We're down 100 handles from the high right now. Folks, if we start making lower lows after 10:30 in the morning, this is a really bearish chart in Nasdaq. Just keep that on your plate to keep a look at it, because if we've got that S&P number up there, maybe this is going to be a day, one day away from that new moon, where maybe there's going to be something happening that could be very interesting. So that's the key to remembering these things, and that's one of the things that we want to be watching. Now, I have to do a tiny bit of, and I mean a very tiny bit of work for myself here, because I had to put an order in, and I don't want to mess this up too badly. So just give me a second here so I can get this up, and then we will be ready to go. And I have to get this thing ready here. One thing leads to another, and there we go. Aha. And there we go. I think it all done. All right, now there won't be any problems. Oh, there might be problems. But okay, let's switch over to something that everybody wants to talk about. At least I think they do, because I had 3 requests for it. And that is the old slippery stuff itself, and that is the crude oil market. We're going to get up here, and we're going to take a look at the hourly chart on crude, which takes us all the way back into June. You can see we had a 3 drives to a top pattern way back in early June. That led to a 10% break in oil. We got all the way down. We went from 40 down to 34, $6. That's a little more than 10%. Then we made up with double top. Then we had the Gartley. We've been going sideways now for well over 6 weeks, and we are coming up to the mother of all tops up here, I think, at 42.60. The ABCD structure measures up in here, so we want to be watching that. What's interesting is we've got a lot of these patterns coming to do, and here we're one day off of that new moon, if that new moon means anything, and I'm not really sure that it does. So I'm just giving you, what I think is happening with the oil. If you're going to do something like that, you've got to risk about 80 cents in the oil, because it has a lot of volatility, and so we've got to take a look at it. I have not, Duffy. I've never traded Tesla, so I wouldn't buy the car. I wouldn't buy it if they gave it to me, I'd resell it. But I don't trust a car that you can't hear. And I actually have written in it, and I wasn't impressed. It's a $100,000 Tesla, and I thought the Jaguar for $60,000 was about twice the car. But you could hear the Jaguar, but you couldn't hear the Tesla. Tesla is not an auto company, folks. It's an AI, artificial intelligence gathering thing, just like Amazon is, and Facebook and Google, all that stuff. They're just gathering data, and they're just using it to their best advantage. We're losing control, folks. The old country is being taken over by the young bucks, and there's not much we can do about it. So we'll see what happens, how it ever going to turn out. My good thing is at least I'm at that 8 furlong pole. So I don't know when the old end is going to come, but I feel so darn good. I can't actually, when I look at this stuff in the morning, and I've been doing it for so long, I just thank God that that I still like doing what I like to do. I mean, it's really, I've just been lucky. So I don't know. But anyway, that's what I say. Folks, I just look at these charts. I gave up trying to figure out the fundamentals on these things many, many years ago. And believe me, when you see the stuff that's going on right now, it's very, very similar to the dot-com bubble, folks. It really is. But the dot-com bubble was actually a lot worse. With Amazon, Google, Facebook, Tesla, all these things, they have a reason to be up here. Back in the dot-com bubble, I mean, there was stuff out there that was so bad. I mean, even Global Crossings, that was basically a big scam. And, Sycamore Networks, I remember the story behind Sycamore Networks. It was out of a garage out in California. And, they made a lot of money. Where did the stock go? It went to 26 cents and then went off the pink sheets, I believe. So anyway, a lot of these are going to be happening, but that's the emotionalism of the market that we're looking at. Look what happened during 2010 to 2018 with Bitcoin. It went from a few pennies, and I understand that Prechter's son, Elliot, actually bought it under $1, and I don't know when he sold it, but that's a huge move. $1 to 19,000. Shut the front door. That's more than you get at the old Wells Fargo office when they pay your interest every month of 0.00000. But maybe all of these this what do you call it? Negative interest rates is going to happen along with some of the other stuff that they're talking to us about. That I don't know, but we'll see. We also have to look and remember that we are in an area where Rich Anders sent this to us over the weekend here, but we have the largest number of call buying versus put buying that we've ever had, even worse than the dot-com bubble, folks. So that's something to pay attention to. Maybe it means something these days. Maybe it doesn't. All I know is that it's happening now, and that's it. So we'll keep an eye on these things. If you have any questions, and I know the board's lit up because Al's telling me, keep those callers, trying to hold them back, but it's 877-927-6648 if you have any questions, and we'll be more than happy to answer them for you. And if we don't have an answer, I'll make something up that'll be creative enough that you'll actually believe it. Let's take a quick look here at the natural gas before I leave you, because I think we made a tiny bit of a bottom down here yesterday at that 162 level. But folks, below 162, it's got big trouble. So let's remind ourselves of that. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Back, and I've been asked a historical question, and that's about Los Angeles back in the mid-'60s. When I was back there, I worked for Eli Lilly, and I traded through Clayton Brokerage. They're at Wilshire and Barrington, and right near UCLA. And also across the street was a brand new building being put in called the McCulloch Oil Building. It was one of the larger buildings in Los Angeles at 22 stories. And on the 22nd story was the offices of Conti Commodity. And they hired away from Roy Longstreet, the office manager, who was Roy Fassel. And also working there was Jim Twentyman. And Larry Williams traded out of that office, as did a whole bunch of other people. So what I decided to do was to trade over there, and that's what I started to do. The question that the person asked was about Gene Morgan and the KWHY. KWHY was the the TV station there in Los Angeles. It was the financial station. It was on a cable set, and basically what it came on, I think it was about 8 o'clock in the morning, and it went through till 2 o'clock. Between 1 and 2 was Gene Morgan charting the market. He was a big stockbroker at Bateman Eichler in downtown Los Angeles. He had a very high level clientele, but they had all kinds of guests. One of the contributors there, of course, many of you remember, Ed Hart was there. Ron Insana was there. Ron was there because he was a sophomore at the University of Southern California in communications, and while he was in school, he worked there. And then when he got out of school, it was about the time that Sue Herrera descended, and I think it ended in 80 and 91 or 90. Yeah, it was 90 or 91. They ran out of money. It was a joint process between Glenn Taylor, who was Sue's boyfriend and live-in, but and Merrill Lynch put up the money. But Merrill Lynch wanted to pull out, and Glenn didn't want to put the money up, and so it basically disbanded. And when they closed it down, the first year, I think Sue went back to New York, and she pounded the table for NBC to start this financial channel, and sure enough, it turned out to be a really good thing. And her and Bill Griffith and Ron Insana started the whole thing, 20-some years ago, and it's been going along pretty good. So that happened, back in the old days, as they say in the trade. So let's pay attention to it. Okay, here we've got silver's now trading about 25 cents off the high. We're down around 21.29 right now, and I don't know where it's going to go from here, but we were right up near that 1.618 expansion that we pointed out at 21.55. The high today was 21.54. Whether that means anything, I don't know, but I think that 1840 level in silver and gold was very, very important. We focused on that chart earlier today, and these are just charts, folks. I don't know the fundamentals. I get flack from people saying, "Why do you say you don't know something?" And I'm telling you the truth. I could sit there and say to you, "Wow, I don't know if that's what's going to happen or not," but I really don't know where these markets are going, and nobody else does either. One of my biggest disappointments in life when I first figured that darn thing out, and I remind myself every day that I don't know where it's going to go. The good part is nobody else does either with 100%, ability. Probably the Fed does, of course, but that's neither here nor there. So that's all I'm doing is I'm just looking at patterns, and some of these times these patterns work, and sometimes they don't. And when they work, you feel pretty good, and when they don't work, you should feel pretty good. And that's the whole key, to pay to what you're looking at. What you've got to do when you're doing trading is you have to take what the market is giving you in feedback and say, how much, what are they giving me in feedback here? And that's one of the things that you got to try to do is to realize that that's that's all what this business is about. It's about laying out a strategy that you think is correct versus somebody who might be wrong. And when these guys are like Bezos and these guys are these super billionaires, you can't compete with these guys. Come on, give me a break. I'm just looking at the little pieces in between. I don't trade Tesla. I've never traded that. Amazon, traded Apple a couple times. But, I'm basically looking at foreign exchange and I'm looking at the futures markets. I've got my eye on the soybean market because I think, we're in a corrective mode, at least this morning. And, so I want to watch to see what that correction is going to do. I'm looking for a potential buy in coffee, believe it or not. And cocoa is actually looking pretty good. So some of these things that are related to these food staples, I think down the road are going to look pretty good. But that's neither here nor there. Okay, so how we've got this thing, we've got the main thing we've got to watch here, folks, and this is the really key part. And I just posted it here a little bit at 9:30. We're trading at 10,967. We're down well over 100 handles now in the Nasdaq. And if we're making new lows after 10:30 in the morning, folks, I'm telling you, that's not good. Sayonara means goodbye in Spanish. Vaya con Dios means goodbye in Mexico, I believe. And what sayonara is Japanese. And au revoir means goodbye in France, and son of a gun, if we get below 10,850 is going to be goodbye in any language, and especially for making new lows after 10:30 in the morning, because we are right at the proverbial moment of truth here in the next 10 or 15 minutes. If this thing doesn't hold in the Nasdaq, this means this is a failure, and that is super bearish, as they say in the trade, because what goes up doesn't always come down. So pay attention. Look at the Dow Jones. We've just rallied 120 points in the Dow Jones, and with the Nasdaq going straight down. How do you figure any of that stuff out if you're trying to do something fundamental, Oh, I see what it is. Oh, the old 200-day moving average hell. There you go. Okay. All right, let's move on here to one other thing that I wanted to cover, and that is the dollar index. And here's a perfect example of the BS that you have to go through and some of this stuff. But the main thing is this morning, I happened to awake to, in fact, it was at 2 o'clock in the morning. We were having a conference call with the family in Hong Kong because everybody's there, the three boys and mom and dad, and Vivian's mother is quite ill, but she's going to make it, I think. Anyway, they were just getting back from swimming. They rented a house on the beach there, and with social distancing and everything, and so they were having a great time. And so it happened to be 5 o'clock in the evening there, 2 o'clock in the morning our time. And so Sarah and I chatted with him and got to visit with him a little bit. And then after about an hour, we went back to sleep, and then I got up. But during that time, Bloomberg was on, and they said that the U.S. dollar was under attack and it was collapsing. And I, being short the euro, I said, uh-oh, this one's not going to work. And so after the breaks came in and everything, and I finally got to the computer and see where it was just absolutely, ridiculous that the darn thing was actually going down, not going up. Give me a brace. The Bitcoin I cannot post, but I will. Maybe I can. I did have a chart on the bit a little later, but I don't follow Bitcoin. No, I don't have the Bitcoin, but I do have the one that I like the best, and that is ADA. I'll get that up, and I'll let you folks take a look at that, and you'll be able to see it, because I think that's the one that's got the thing going here. Okay, we'll be right back, folks.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, folks. Excuse me. I want to bring this dollar index up to show you what's happening here because this level of 95, wow. Time out, folks. The frogs are coming. I've got to take a little drink here. Okay, let's look at this dollar index. You'll notice that we've been down as low as 95 and change. We're at 95.68 right now. That's the bottom that we made back here on June the 8th. I don't know whether we've taken that bottom out yet. I'll have to check later. But if we close below that 95.68 level, that is not going to look very good to the U.S. dollar. And I think that would make another reason for people that want hard currency to take a look at that silver and gold also, because I think all we're going to see here in the silver and gold here is probably a pullback. Well, we've already pulled back 36 cents in the gold or in the silver, so that's the first harmonic number in the silver already. Gold hasn't backed off very much, but this is the area because of the new moon here and these price levels that we're looking at. I have to think that they're very important. Again, I want to bring this chart up from the 4-hour chart of the gold from the newsletter because it says above $1,800 suggests 1840. Our high's been 1842 today. So I think that's important. You notice the breakout that happened right here. That last little pullback was a 382 retracement. That was your last buying opportunity down there at 1794, and now we popped up here quite a bit. So I think that we're probably getting ready for some type of a correction in this. But again, that's just my 2 cents worth. So those are just some of the things that I'm watching right now. Because we're into the opening part of the day here, I need to check what these prices are doing, so just give me a tiny bit of time to get this homework or this busy work out of the way. We're trading 1837 in the gold. The high has been 1843. It's only off $6. We are now, we're still making new lows now in the, no, we haven't made a new low in the Nasdaq. The real key, folks, is watch what the Nasdaq is doing in 45 minutes. If we're below 10,900, it's going to sell off the rest of the day with a high probability, somewhere in the area of about 80%, if that's the case. So remind ourselves that, because that's a key thing. Another one to pay attention to, of course, is this euro. Let's get this euro up so the folks can see it, because that's the backside or the reverse side of the Dow, the dollar index, and that's another one that we need to pay close attention to, because you can see as we're making a double top in the euro, we're making a double bottom in there. The question someone's asking me, I'm looking at the Nasdaq futures. Yes, I'm looking at the Nasdaq 100, and that is basically below 10,900. That would be very, very negative. Especially the key thing is, Jimmy, it's got to be after 1030. Now, IWM, I believe, isn't that the Russell index? Because the Russell index and the Dow Jones both look negative still compared to the other two, because it's basically this Nasdaq that has been pulling up, and that part of those stocks is also the S&P. Folks, these things are cap weighted, and we're trading for $3,000 a share and $1,500 a share and $2,000 a share. You can see that these things are heavily weighted, so it gives the market the illusion of that everything's going up. Yeah, some of it's going up, but it's the big stuff that's been making this stuff run. So those are the keys to to pay attention to. I'll bring up the Russell here to take a look at. I haven't updated from Friday from yesterday yet, but I will get it up here so you'll be able to. So you'll be able to see it. I think here it is coming, and we'll get it right up here. You'll see we did go a tiny bit higher yesterday, but really nothing much. And we're still in the same ABCD pattern here in this Russell with, a lot of resistance at this 1,500 level. Look where Nasdaq is. Nasdaq's off the top of this page. So, that's a big thing. And the S&P is, I don't know what the high in the S&P has been so far, but remember we had this big index up here to pay close attention to. You'll notice here the daily here in the Nasdaq and the S&P is not made new highs by anything. And if you'll remember, we looked at this hourly chart possibly that was forming this pattern in the cash S&P. We'll get this up to let you take a look at it, and you'll be able to see there's where we are right up in there. So whether that means anything or not, but that's a 3-drive pattern, folks, on a 4-hour chart, and it's taken 2 weeks to complete. So it follows all the characteristics you like to see with time up and time down. So it's harmonic. It's certainly you can see it. Just look at it. You can see it's a 3-drive pattern, but whether that means that. So let's keep an eye on here, because we're 10,900, and we're going to make a new low here in just a minute here. But the key point is below after 1030. If the market is still breaking below this 10,900 level in the S&P, in the Nasdaq 100, that is going to be a negative sign. But right now, it's right over the moment of truth where the bottom should be here. I mean, this is what I watch, and that's a to me, it's a big thing to tell me whether it's going to be turning or not. And I don't know, but nobody else does either. All I'm trying to do is find an entry where you don't have to risk an arm and a leg to see if it's correct or not. Now, the number that we're going back to the crude oil, the number we're looking at in the crude oil is 62.66. We're trading at near the highs of the day here at 42.34. But at that number, when you get up there, it's going to be a very low-risk trade. That's a 1.618 expansion up there, so sort of pay attention to that. I think it'll be worth your while if it actually works that way. That's the main thing. The key level in the euro to watch, the spot currency, is at 114.85. If we get above that, and we're trading at 114 and 114 something. We're a little below that right now, but it could easily break. That dollar index could literally just give up the ghost, and if that happens, I think the price of this gold and silver could go a whole lot higher. We'll have to let the marketing gods tell us where they're going to go. But that's what we're watching here this morning. We still got the silver is only, we got the gold is only, $5 off its high, trading at 1838. And who knows, but we'll see. Now, we're up now 3 days in a row in the gold, and the whole world is talking about it breaking out. The old high in the gold, folks, came in at $1,931 an ounce. That was in August of 2011. Happened to be in Hong Kong then. I was interviewed by the Western edition of the Wall Street Journal, and I was calling for a top that week in gold, and it certainly did, but I'm not calling for a top in here. I just think we're going to get some type of a correction off this level, but how much we're going to get, I don't know. A lot of it will depend on whether this dollar collapses and the euro, breaks up to the upside, which is also possible. The British pound has gotten all the way up. Let's just take a minute. We've got the break coming up here, but we're in some really stiff areas of resistance here in the hold on one second so I can get it up here so you folks can look at it here. We're trading, shut the front door. That's not right. No, we went above it. Wow. This British pound is starting to break out, folks. My goodness, look at this. I just realized this. 877-927-6648.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Wow! If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, two things. Mr. Z's asked a question here. If the euros exceed that 115 area, how much higher do you think it'll go? Z, I really don't know. Longer term, the euro's got a price objective of 106, of par. So, that's what the long-term charts say. But, we could get it up there and maybe, who knows? The question is the U.S. dollar going to collapse? Well, it certainly could. If we keep printing money like the government's going to do and give money away, and, God knows what's happening in this stuff, we'll see. I haven't put up a chart on the long-term weekly in that because I don't have it quite ready here, so I'm not able to show that, but I put it in the newsletter over the last couple of weeks because I don't think it's a magical number up there at 115, but the whole world is looking at it, that's for sure. But that dollar index is the key, because if we start breaking below that 95.40 level, that's going to tell us that something is going to be looking, and we'll be able to see. Now, the one thing we do know for sure is the bottom is in the Nasdaq now. We've rallied 40 handles from the bottom. So anything below after 10:30, that's in another half an hour. If we start making new lows below 10,900 in the Nasdaq, that's going to be bearish for the Nasdaq for the rest of the day, and at least on a probability, and that's all it's based. It's based on probability. Now, someone's asked me a question, did I do any selling up at that double top in the Nasdaq? No, I did not, but I was with someone that was doing it, and I cautioned to them the fact that it was a dangerous trade, but you had a place to put a stop, and if it made a much higher high of more than 20 points in the new high, that you had to get out of it, and it didn't, and so it's had a big move down. Now, the $64 question is, are we going to break below 10,900 by after 9:30? And if we do that, that's going to give us some market feedback, and that's what you're doing as a technical trader, is to look at that. Now, we've got the end of the day coming up right now, and I'm glad we made it through today, and tomorrow we have another day, believe it or not. Hopefully we're going to have Arch Crawford on this week, and we're going to have a cameo appearance by Bill Meridian.